Bank-owned life insurance, the tier 1 asset for banks. The banker's bunker. Where do banks save their money? Where do we save our money? For many people, the answer is in a bank. So it surprises people to learn that one of the places banks store and grow their cash is outside of the banking system altogether. Banks, when it comes to investing their own money, don't follow conventional wisdom of putting their cash into mutual funds, stocks, hedge funds, term life insurance, or risky real estate deals. Instead, they place a large portion of their vital reserves into high cash value life insurance or whole life insurance policies. Since the financial crisis, referring to 2008, banks have put a lot of new cash into an old-fashioned product designed to build greater protection, security, and profits they can depend on in unpredictable times. As quoted by Barry James Dyke, the banking industry, one of the most powerful and influential industries in the United States, has a deep affection for cash value life insurance and treats it like a golden asset. Bank owned life insurance or BOLI. Life insurance are the bank's bank. Bank owned life insurance is a form of life insurance purchased by banks generally on the lives of their executives and key employees, where the banks pay a premium which has a cash redemption or buyback value. Primarily, the BOLI contracts are used by banks to gather funds for employee benefits at a lower rate in comparison to what they would have paid otherwise. The bank comes up with a contract and makes payment into a specific fund that has been set aside for the insurance trust. All of the premiums that are paid into funds along with capital appreciation are generally tax-free for the bank. This is a creative tax-free way for the banks to fund their employee benefit programs while also helping to offset the potential loss of a valuable executive's services. Banks are the beneficiary and also usually the owner of the policy upon the death of the employee. Banks store and grow their capital using permanent or whole life insurance, and they own a hell lot of it. Why banks buy life insurance? Life insurance is the banker's secret bunker. BOLI is a type of COLI or corporate owned life insurance. COLI is an investment alternative to mutual fund scenarios that allow a corporation to accumulate a tax deferred asset. Banks buy life insurance because it offers benefits not available through their own products and institutions. Bank products have low rates and are taxable, while life insurance offers guaranteed growth, tax advantages, and an opportunity to shore up balance sheets with an asset so reliable that it can be used as a collateral. BOLI assets are beloved by banks for their robust capital profiles. Since the policies are considered somewhat liquid due to their cash surrender value, they are a tier 1 capital. Banks find BOLI an attractive asset partly because life insurance companies invest for long-term stability and do not employ leverage. Leverage is an investment where borrowed money or debt is used to maximize the returns of an investment. This makes bank-owned policy cash value a high-quality, low-risk asset. The most common reason cited by bankers for purchasing BOLI are that it provides competitive returns with superior credit quality. Life insurance offers a measure of safety and strength. BOLI policies produce far superior returns than traditional bank investments, and the growth in the cash value of the policies, as well as any death benefits paid out, are completely tax free. Since the practice was established in the 1980s, banks have purchased increasing amounts of the bank-owned life insurance because it outperformed both stock and safe assets that banks sell to their own customers without risks of fractional banking or market volatility. Fractional banking is a banking system that requires banks to hold only a portion of the money deposited with them as reserves. The banks use customer deposits to make new loans and award interest on the deposits made by their customers. Many banks have more invested in life insurance policies than they do in bank premises, fixed assets, and all other real estate assets combined. According to the FDIC, or Federal Deposit Insurance Corporation, banks are the largest purchasers of cash value life insurance in the United States. BOLI has become one of the most common methods of financing the cost of employee and director benefits, including non-qualified benefit plans. It also plays a role in helping banks meet their capital requirements. The benefits of these policies are twofold: to generate income in the long term and to retain bank leaders. Why is it relevant to us? As it turns out, most people want the same benefits the banks are receiving. A family is not a business and certainly not a bank, but we always encourage people to think of their finances or their family's finances as their personal economy. What lessons can we learn from banks that we can apply to our own finances? Life insurance brings the same benefits to small businesses and even families. It makes our personal economy more profitable in good times, more stable in the face of financial storms, and more flexible to face everyday challenges and opportunities. Banks and other saving institutions who remain healthy put tried and true financial advice to work. Think long term, resisting short term gains and speculation. Anticipate and prepare for costs, including unlikely losses. Save money in long term assets with gains that outpace inflation. Build equity and ownership in real assets such as life insurance. Avoid speculation for short-term gains with high risk, and reduce, defer, or avoid taxation. As quoted by the Motley Fool Foundation, put simply, BOLI is attractive to the banks because it can produce better returns that the banks couldn't otherwise achieve. As quoted by Brian Tracy, the ability to discipline yourself to delay gratification in short term in order to enjoy greater rewards in the long term is the indispensable prerequisite for success. And as quoted by Rick Rubin, people are willing to get short-term gains at the risk of long-term choices. May the force of cash value life insurance or whole life insurance be with you. Please go through the description for the sources for this presentation. I've shared the link to my next presentation, how life insurance will protect us from inheritance tax in the future, at the end of this presentation. And do not forget to check out the playlist for more presentations. If there is something to gain and nothing to lose by asking, by all means ask. Thank you for taking the time to watch this presentation. I sincerely appreciate it. Namaste.